Monks is a long-only global investment trust seeking to grow savers' capital on a long-term view, and by long-term we mean 5 to 10 years. We invest in 120 stocks globally, and in the main those companies we believe should grow their revenues, cash flows and earnings at above market average rates over the long term, which leads to share price appreciation for the trust. So absolutely a growth portfolio, and for the Monks Investment Trust, the minimum growth rate we're looking for in the portfolio is for share prices to double on a 5-year view, and we should have a 30% probability for all the holdings that that's the case. But we define growth in 4 main ways. We have rapid growth companies. These are companies which are growing their revenues and earnings exponentially, often 30–40%. We have stalwart companies. These are companies which are entrenched, have strong market positions and strong pricing power, grow their earnings around about 10–15%. We also have cyclical companies, which are companies that are managed by sensible management teams with strong capital allocation skills. And then finally, latent growth companies, companies where perhaps the market believes that this is an ex-growth company, but we see something which will change the fortunes of the company and the growth profile on a 5 to 10 year view. And that sweet, broad breadth of growth gives us a strong opportunity and a conviction in being able to identify strong returns for investors. The bottom-up approach that we take means that the 120 stocks are really a collection of stocks from around the world, and that's first and foremost the process is to pull that together. Thereafter, a sort of top-down look at the portfolio gives us some interesting themes and some areas of enthusiasm that give us confidence we can generate returns in the future. Now, as you would expect, we have a number of those. So some significant ones include the trust portfolio's exposure to emerging markets and the middle classes. So growth in disposable income in parts of the world like Asia can have a profound effect on how consumption patterns change and ultimately how the consumption of financial products and services, and ultimately we have a number of positions in there. So about 1/5 of the portfolio is exposed to that growth. Elsewhere, another 1/5 is exposed to what we call online platform businesses. The unifying theme here is that these companies are changing the way people consume products and services across the world. So typical names there include Alibaba and Amazon, which you may be familiar with, but we have a range of smaller companies that are earlier stages of their business cycle. And then finally, perhaps just an interesting one is that we're exposed to a number of innovative healthcare companies. That's a part of the portfolio that's been growing in the last 12 to 18 months. A number of companies here which are doing fantastic things in terms of improving patient outcomes and taking costs out of the healthcare system.